Good evening. Welcome to the Shadow Trader Video Weekly for Sunday, May 20th, 2012. Kicking it off with a weekly chart on the S&P, so we can look at just how ugly this weekly bar was of this move down. The market has been just doing nothing but selling for 3 weeks straight here. And as you're going to see in a moment, we're going to talk about the profile and downside reference and things like that. And we really don't have much downside reference here. What downside reference means simply is that you don't have like prior lows or trend line support anymore in the market. Essentially, where you would think, okay, the market's going to go here, where you have sort of a technical. All you really have to go on, more or less, is fib levels. We have a little bit of support here, but it's really a minor support just under here at 1267. So what I'm really concentrating on mostly is the Fibonacci levels. And I think overall, given the tone of the selling, which we'll get into in a second, I think the market could trudge a bit lower down to this 1250 area right here, which would be the halfway point of the move here from the October lows to the April highs. Okay, we got a 38.2 fib is going to be right here at 1289 coming up. As I was saying, the selling thus far has not been really like throw in the towel type. So that's why I'm thinking that there could be more. If we look at market internals on Friday, when S&P was down 10, Dow off 70, a decent amount, not like gigantic. Remember, this is a weekly chart, so that bar looks really huge. If we could switch to a daily now to put that into perspective, right? So there's your action on Friday. It was relatively controlled. Now, however, be aware Friday was options expiry, so you had a lot of stocks kind of pinning. So a smaller range is generally expected on those types of days. So that may be one of the things that was holding the sellers back, which gave us, a little bit more choppy action, not a huge range extension. But either way, the breadth was 2 to 1 negative, 1.66 to 1 negative on the NASDAQ. The ADs were not too bad, but if you look back here on the prior days, you can see we did have some pretty low readings. I mean, this AD here is key on Thursday. Whenever you have an AD of 2,000, minus 2,000 or even worse, it's to be taken note of. And I didn't actually make a note here as to what the breadth was here, but I believe it was close to 10 to 1 negative on this day. I know it was pretty heavy on Thursday, at least into the close. Going back to charts and looking at technicals, in terms of intermarket analysis of everything else, I've been talking about this NDX support level here. This kind of has to hold. This is really a make or break for the NDX because I think it's really important. I was tweeting about this level, and we did actually early in the day on Friday get like a perfect bounce, like to the penny, like right on it. But then the market just continued selling further. If the NDX doesn't hold here early next week, I've drawn this line here of these prior highs. This is probably a very strong support point for the market, I would say. For the NASDAQ 100 to come to here, I've not put a fib on it, but it would be interesting. We probably should. And we probably should be starting from the same October lows as we did on the S&P chart. And if we put that there, we can see that's also a 50%. So that makes a lot of sense. So now you've got a really strong area there where a halfway point of the move is 50% fib retracement, also with those prior highs. So again, if this doesn't hold here, or if the bounce is weak early next week and we roll back over, I would expect the market wants to come to here, and the NASDAQ 100 wants to come to about that 2417 area. Looking at, that was NASDAQ 100, by the way. Looking at the composite, it's a little bit more beat up. And again, looking at these October lows. And again, you got to use these fibs because we really have no reference point as far as trend line. The channel has broken. We snapped down to the downside. It's definitely lost it, right? And I was also drawing channels, if you recall, in last week's video, I was drawing channels this way, and I said that we've now broken out of the lower end of it. So if we extend it to the right, we can redraw that, and that would be like that. And you remember in last week's video I was saying, will the channel snap to the downside or something like that was the question I was asking, and indeed it has, right? We've actually fallen out of this slightly descending channel. I was saying it's not very steep, it could get steeper, and lo and behold it has. So that 50% retracement also in the NASDAQ composite is probably a target for the markets as well. Let's just take a look at the Dow while we're at it. A little bit stronger than the others. Notice that it's relatively close to that area, and it's probably not been a fib retracement at all in terms of a 50%. I will bet just by looking at it, right? Yes, obviously we're not even close to the 38.2. So, and also the same prior highs there. So Dow probably finds support in the low 12,000s there. Okay, taking a look at profile over the last week. All right, when the market is trending like this and you have trend days kind of down, which you had Thursday and Friday, the point of control as to where the fairest price is doesn't mean as much. And I'll be honest with you, overall, I think the profile itself in terms of shape and whatnot does not mean as much. What we want to use the profile for here is more of just a confirmation of what's going on instead of looking for a turning point. So in that sense, there is relevance. We have extension of range, right? Notice that the value areas are larger, which are the black brackets where 70% of the trade went off. And we also have clean versus dirty, which means that here, when the market's pausing and the market's not doing a very good job of going lower, the value areas overlap. As you can see, the brackets are touching each other, and then once the market breaks out and the trend is really strongly underway, notice what happens to the value areas. Clean break away from the other value area, and here as well, clean break away from the other value area and moving lower. So I think even the profile basically supports a little bit of more selling to come next week. All right, let's look at some leading stocks. I get a lot of questions on Apple constantly. Apple. Where's the buy? Some people saying I'm going in here. Seems to me like a lot of subscribers and listeners, they're kind of just going in willy-nilly, maybe because they think it's cheap enough. I don't think there's a buy point just yet. I think this chart is very clear. Notice that the 50% fib is 505, and it ties right in with the trend line right here. Okay, this one obviously has been broken. That was a secondary trend line, so we can delete it, right? You have primary, secondary, and then tertiary goes up like this, which was obviously too steep. It was not sustainable. So I think we're coming back to this primary here, and notice that it's right around the 505 area, and that's not that far away. You've got about $25 between now and then. Price line, another leader again. There's your trend line support coming up ahead of us. Goog had a very interesting week. I think there was a news-driven move here, popped it up out of the range, and then it just gave it all back. So obviously that was very, very short-lived. Amazon, which was one of the strongest stocks out there until recently, it now looks like it's doing a gap fill, so I don't think it would be in play unless its primary trend line was tested. And as we go through all of these stocks, one of the things that you should be taking away, I think, in looking at them is simply that if these leading issues, such as Apple, Amazon, Priceline, look like they have further room to maneuver to the downside, then the broad market itself is probably going to go lower as well. Broad market probably has more room to move on the downside, essentially same exact thing. So keep that in mind. All right, I'll leave you with just a brief note about Facebook. Got a lot of questions about Facebook as well. Are you a buyer? I am not. It did the typical IPO shuffle on Friday, where opened here at 42, closed lower, and as I've been saying, well, I can't show you that, but I'll show you Zynga, for instance. Zynga is a relatively recent example of what I think is a tradable move in an IPO. What is a buy signal to me is when the stock is weak like this off of the open, which it looks like Facebook is, eventually the selling stops, stock turns around, and you have a buy point right here when you get to the opening price on the opening day. When you retrace the downward movement, there's usually a playable move to the upside because all these sellers are done. New money's coming in. Now the stock's in rarefied air, open territory, whatever you want to call it, and it's free to move. And sometimes it sustains itself forever, and that's the low that the stock saw. And sometimes in the case of Zynga, you just have a tradable move from like 11 to 16 here, and then it falls back down. So obviously you've got to be playing it accordingly. All right, that's all for this week. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.